All right, let's get right into it. The crypto market right now is, well, it's a total paradox. On one hand, you've got this incredible euphoria, but if you look just a little bit closer, there's this deep, deep current of anxiety. So what is actually going on here?
Okay, so first, let's look at the good news, right? I mean, look at this number. Bitcoin has been on an absolute tear, blasting past 77 grand and hitting this 24-hour high. This is the stuff that gets people excited, it feels powerful, it feels almost unstoppable. But, and this is a big but, that's only half the story.
Because right after seeing that huge price, you see this number, 21. And what's that? Well, that's the Fear and Greed Index, and it's screaming extreme fear. So let me get this straight. The price is flirting with all-time highs, but the market, the actual people in it, are completely terrified. How does that even make sense?
And that right there is the central puzzle we're digging into today. A market of contradictions. Why this massive disconnect? Why are people so scared when the price chart looks so good? The answer, it turns out, is that the market is caught in this massive, high-stakes tug-of-war.
So picture this. On one side of the rope, you have all this positive, risk-on news pulling the price up. That's when everyone's feeling bold and buying into stuff like crypto. But on the other side, you have a whole bunch of new, really complex, and honestly kind of scary risks that are just yanking the sentiment straight down into the mud. These two forces are locked in this epic battle right now. So let's start with the bulls. What's pulling the price up?
All right, Section 2, the geopolitical relief rally. So what exactly lit the fuse on this recent price pump? Because believe me, it wasn't just random buying. A huge geopolitical event just sent this massive wave of relief across all global markets, and guess who was riding that wave? Yep, Gitcoin.
The big story was Iran reopening the Strait of Hormuz. As soon as that happened, you could almost hear a collective sigh of relief around the world. Fears of a bigger conflict just kind of evaporated. And when that happens, investors feel safe to move money back into so-called risk-on assets. And these days, Bitcoin is pretty much the king of risk-on assets. So the money flowed back in, and boom, the price shot past $77,000.
But here's where it gets really, really interesting. You have to ask, who is actually doing the buying? Well, look at this. While your average retail investor is freaking out, extreme fear, remember? The whales, the big money players, are doing the complete opposite. They're not just buying, they are accumulating Bitcoin at the highest rate we've seen since 2013. They are quietly sucking up all the available supply. It's almost like they see all this fear as a huge buy signal.
Okay, but that's where the happy story ends. Let's talk about those cracks beneath the surface. The reason everyone's so terrified, well, it isn't just a case of the jitters. No, there's some very real and very big risks bubbling up that are threatening to crack this whole thing wide open. First on the list, a massive legal threat. The famous gold bug, Peter Schiff, is going after Michael Saylor, maybe the biggest Bitcoin bull on the planet. Schiff is basically saying that the way Saylor's company is structured, its whole treasury model is, and I'm quoting here, misleading to constitute fraud. Whoa. When you have giants threatening lawsuits like that, it throws a huge shadow of uncertainty over everything.
Next up, something that sounds like it's straight out of a sci-fi movie. Look at this number, 1 billion. That's how many fake Polkadot tokens were just minted on Ethereum out of thin air. You heard me right, 1 billion fake coins. It was all because of a huge exploit on a cross-chain bridge. Now thankfully the attacker couldn't sell most of them, but just the fact that this could happen, it's absolutely terrifying for the entire crypto space.
So you're probably asking, how on earth is that even possible? It all comes down to something called a proof replay bug. The easiest way to think about it is like a magic photocopier. A hacker found a vulnerability that let them take one legitimate transaction, copy it, and then replay it on another blockchain, basically printing counterfeit assets. It's a huge knock to the confidence people have in the fundamental plumbing of the crypto world.
And it's not just tech failures. The regulators are sending a very clear message. A guy who ran a $20 million crypto scam called Meta1 Coin was just sentenced to 23 years in prison. 23 years. His whole project was a lie, claiming to be backed by billions in gold and art. This is a serious reminder that the days of the Wild West are over, and the consequences for fraud are getting very, very real.
Even one of the biggest hype trains in crypto right now, tokenization, is getting a major reality check. The idea of putting real-world assets on the blockchain?
Well, at Paris Blockchain Week, industry leaders basically stood up and said, hey, everyone, tokenization doesn't magically fix illiquid assets. Just because you put a building or a piece of art on the blockchain doesn't mean people will suddenly want to buy and sell it constantly. It's a dose of realism that's definitely cooling some of the hype.
Okay, so just when you thought it couldn't get any more complicated, let's throw another massive, unpredictable wild card into the mix: the rise of AI agents. And listen, this isn't some far-off futuristic idea. This is happening right now, and it's starting to change the game.
Think about this for a second. For years, it's been humans telling bots and computers what to do. Simple. But now, that entire relationship is flipping on its head. We're seeing the start of a rent-a-human economy, where AI agents are literally hiring humans through an API to go out and do things in the real world. The AI is the boss now. This introduces a whole new level of complexity that, frankly, nobody really knows how to price into the market yet.
So let's bring it all back together. Where does this all leave us? Well, it leaves us right here: Bitcoin's high-stakes standoff. You have these two incredibly powerful, totally opposite stories pulling the market apart, and it's creating this tense deadlock right at a super-critical price point.
Let's just lay it all out. In the bullish corner, you've got geopolitical calm, you've got whales buying up everything they can get their hands on, and strong ETF inflows. But in the bearish corner, you have huge legal threats, scary tech exploits like that fake DOT thing, analysts screaming bull trap, and even the threat of governments like Germany dumping their Bitcoin holdings. It is the definition of a tug of war.
And it's not just random fear. Some pretty sharp analysts are waving red flags. One in particular, who goes by Marmot, flat out said that celebrating Bitcoin's price getting over $70,000 is, and I quote, very, very bad. His argument is that this rally just doesn't have the legs to stand on. It's a house of cards, designed to trap hopeful buyers right before it all comes crashing down.
And that brings us to the final critical question. You have smart money betting big, while at the very same time, these massive systemic risks are threatening to pull the rug out from under everyone. The market is coiled up like a spring, right around that $78,000 mark. And so the billion-dollar question, or maybe the trillion-dollar question, is which side is going to break first?